everyone, and a very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi. This is the 1 hour long show dedicated to your personal finances. We help you as you get onto your wealth creation journey by guiding you with the right investments for your portfolio. We help you save as well as spend your money better. Well, on today's episode of the show, the IPO market is something that we'd like to talk about. It's hotting up and how, and that's the reason why I think it's worth discussing whether retail investors should participate in the IPO market, what are the risks involved, and essentially all that you should read about before deciding whether you should subscribe or not to a particular IPO. What is it in the IPO market that's making it attractive, especially given the fact that a lot of stocks on day one of listing do tend to see a massive pop. But after that pop, what happens? And is it a good idea for retail investors to put their money at the time of the IPO opening? Remember, we already have 2 IPOs that are open right now for subscription, and we're going to have many more, at least a dozen more in the span of the next 2 months. Very awaited IPOs that of Zomato's as well, which will open next week. So we thought it would make sense to have this conversation. I have with me Chakri Lokapriya, the CIO and MD of TCG AMC. Chakri, thanks so much for joining us today on ET Now and on The Money Show. So you know what, let's get some context going first. Why are companies queuing up to tap public money today? Why do we have so many IPOs hitting the street? What is pulling more and more companies to list themselves on the Lal Street, according to you?
I think there are 2 or 3 reasons. One is, post-pandemic, we have seen a turnaround by several sectors. Export-oriented sectors are seeing a revival of demand like IT, pharma, chemicals, metals. All these companies are seeing very strong demand, export demand. And second, as the Indian economy unlocks, first wave, second wave, etc., again, confidence starts coming back into system. So this is usually the time when, if you look back several years, several cycles, whenever there is an uptick in the market, the private equity players, the promoters usually like to go public because consumer sentiment here, investor sentiments is positive. So I think that there's a combination of these 2 things. We are seeing a number of IPOs come to the market.
Well, IPOs, of course, just one part of the story. And, if investors get their allocation, then they've got it at the subscription price. After that, it lists on bourses, and then, it's subject to the vagaries of the market. What have you observed? You've been around in the market for so many decades. You've seen so many IPOs come by as well. In the recent IPOs, what have you observed in terms of how they perform post-listing?
I think that's a very important thing to watch out for, because a good 60-70% of all IPOs tend to underperform the market some 6 months, 1 year down the road from the point of the IPO. So then clearly the point remains that it's not that all IPOs will do well. It is like picking a stock. I think an investor should look at the valuations, business fundamentals, the sector in which belongs, just as you would to any other stock, and not get carried away that all IPOs will do well, because in reality they don't. So bottom-up IPO picking is key.
Okay, IPO investing is also tricky because of the lack of historical data. You have the DRHP, which is a big document with so many pages, but largely, the kind of information I'd get probably from a TCS is going to be much more than what I'll get from one of the recent IPOs. So that makes it a little more difficult as well to decide, to come to a conclusion on whether, a company is worth investing in or not. So, Chakri, what do you look at before deciding whether you want to subscribe to an IPO or you want to give it a pass?
Yeah, surely. Now, if we take a specific example, like let's say GR Infra. Now, this is an EPC company. This company it builds roads, and it has a good NHAI book. It has a combination of both BOT projects as well as HAM projects. BOT is build, operate, and transfer. And these companies are, as the economy unlocks, there is a huge amount of expectation. There the government will pump prime the economy by building more and more roads. This company has a good order book. So in terms of it's doing its IPO, the IPO is about 900 crores. So then what do we look for? Look for its value growth. Growth is far higher than that of its peers like KNC or PNC Infra. Its earnings growth is about 40%. Its balance sheet, it is a decent balance sheet, not levered, and very important for EPC company. And then the valuation, it trades at about 10 times. And if you look at PNC or other Nagarjuna or other EPC similar companies, they trade at about 11, 12, 13 times. So the valuation is attractive versus its peers. Balance sheet is attractive versus its peers. Top line growth in line or better than peers. And therefore, this IPO will likely to do well. It just as bottom-up stock picking, that's the way I would approach it.
Okay. Now, I think the one thing that really pulls a lot of retail investors towards the IPO market is the kind of pop that you witness on listing day. Many recent IPOs have gone up at least 20% on listing day itself, which is not a mean buck to make, really, especially given the fact that the time period between you putting in your money for subscription, final allotment, and then of course listing has shortened even more. So just making a 20% pop up as well on day one of listing is pretty interesting, a chance to make quick money. However, is that the right approach when you look at investing in IPOs, especially for retail investors, according to you?
It depends on whether they are the retail investor or an HNI investor. I'm leaving out the institutional investor for a second here, or maybe you can include them too. Now, in the case of retail investor, the maximum is 2 lakhs, and therefore it depends upon the number of times an issue is oversubscribed. Now, let's say an issue is oversubscribed 3 times, then you get 1/3 the allocation. So if you apply 2 lakhs, you get in, let's say 60,000, 70,000. And then if the stock goes up 20% on the listing date, the net of costs, you put in 2 lakhs, you got 60,000 allotted, and that goes up 20%, then net you make about 6%, which is not bad, fantastic. If in return you can make in a 1 week's time when the money is locked. On the other hand, if you're high net worth investor and you leverage yourself, and if the stock went up 20%, then you would not make money. So it's a question of how you approach the IPO in terms of your cost of funds makes a big difference to your returns.
What are the challenges, Chakri, according to you, for when a retail investor has to subscribe to an IPO? I think one of the key challenges is getting an allotment, because nowadays, many IPOs on day one and day two itself are completely oversubscribed. So I think that's the one challenge. But apart from that, what are the other challenges retail investors could face, and how do you recommend they overcome them?
Absolutely right. And as you rightly mentioned, several companies have been oversubscribed like 20 times, 30 times. So out of the 2 lakhs maximum a retail investor can put in, he gets 120th, 30th, he or she gets. So which then, so that is something which they need to factor in even before. But luckily, the waiting time or the time period for which your money is locked is only about a week. So as long as an investor is not leveraged, then depending upon the listing gain, they make money or lose money, of course. Research, the ET now does a fantastic job. There are some websites out there which details out. I think investors do need to pay attention to your show and such shows in getting the information, because fundamental data is not available pre-IPO. And this homework is vital for these guys to go out and make a return on the stock.
All right. Understood. So that's, just some recommendations coming in. But one more recommendation, Chakri. Would you, especially for newer investors, would you recommend, they first dip their feet in the stock markets via the secondary market, or they can as well get onto the IPO bandwagon? Is that something you'd recommend, IPO participation for new retail investors?
I think they should participate in the IPO market. They should, only the thing they need to do the homework, and they need to realize that not all IPOs will make them a listing gain. I think as long as this realization is there, it's pretty much, I think it's a great thing, participating in an IPO. However small your allocation might be, still returns are returns, and therefore it's a good thing.
Well, I must ask you about your take on the currently open IPOs. I know you briefly spoke about GR Infrastructure, but yeah, if you could just talk about what's your take on GR Infra and Clean Science, the other one that's open right now.
Yeah, sure. And so GR Infra is a good name. I think the value is listing at about 10 times PE for like a 40% earnings growth. Of course, these are cyclical companies, but even then, I think its debt to equity ratio is about under 1 time, which allows it to participate in bids, NHAI bids. It's got a fairly decent mix between the under construction, in operation, and in order, roughly a third, and its profit margins are in line with the industry. So that is one. Second is, your clean tech. Now, clean tech, I think, is a great company, a specialty chemical company, then performance chemicals, so more the higher end. And this higher end is reflected in terms of its net margins at about 25%, is way higher than some of the other chemical companies. And what they make, they manufacture in about 2 different factories, is supplied to various industries, right from FMCG, textile industry, chemical industry, pharmaceutical industry, and all these sectors are doing well both on an export basis and on a domestic front. Clean tech company, I think, has roughly 70% of its revenue is export. Export markets are opening up, post lockdowns are accelerating really fast, and therefore this company will benefit from that. And the IPO is about, I think, about 1,500 odd crores. And it's a great company. And I think it's clearly one to participate in.
All right. And Chakri, of course, apart from these two, we have a dozen more, like I said, coming up in the next 2 odd months. Which is the one that you are watching out for?
I think Zomato is clearly one needs to watch it for. It's a roughly 7,500 odd crore IPO. It's one of the first, Info Edge is actually its parent company is also an internet company with owning Naukri, Policy Bazaar and others. And now Zomato is, purely a model which is an offshoot, which relies a lot of data, relies a lot on the internet, and relies a lot on customer aggregation, all the very things which drives up the growth for such companies. Now, it is an EBITDA negative company, but that should not dissuade one from participating. It is a market leader. It is raising capital for both organic as well as acquiring other companies in the space or the related space. And mind you, Zomato today is food delivery, but nothing is stopping it in delivering other goods and over time, and therefore its revenue sources will multiply. If you recall back, Amazon, good old days, 20 plus years ago when it did its IPO on NYSE, on NASDAQ, at that time it was only a single product company. It was delivering books. Today it delivers just about everything. So Zomato is clearly one to watch out for.
All right. Okay. Well, I think, Chakri, on that note, we leave it at that. Thank you so much for joining us today on The Money Show and sharing with us your own opinion on how should one go about investing in IPOs. And, of course, your view as well on the ones currently open for subscription. For all of our viewers, by the way, who've just tuned in, Chakri says that both the currently open IPOs are good to go for a subscribe if you would like to, GR Infra as well as Clean Science.